that now. Thank you for that request, whoever did that. Click OK. Okay, so that has pretty much gone on. The amount of this debt, who holds it, you hear a lot of what, in my opinion, are fairly paranoid discussions as to who holds the debt. Most of it is held by domestic investors. In fact, about 10 trillion of this is really debt that is held by various trust funds. The Federal Highway Administration Trust Fund, the Social Security Trust Fund holds these. So it's not even entities outside the government that is holding, about a third of this. The remaining 2/3, yes, there are some that are held by foreign central banks. Okay, and they don't tell you how much each bank holds, but in total, the foreign federal banks, like the United States equivalent to the Federal Reserve Bank, might hold about 7 trillion of that. It is not something that is published, though, as to what country holds what. So most of when you see discussion of what countries hold what, it is based on analysis, speculation, because what happens is when the federal government has an auction of debt, it issues the debt to two banks, Bank of New York and Chase, take down pretty much the entire auction. And then they turn around and they sell those to various, and it could be domestic investors, it could be foreign countries that purchase additional amounts, but they don't purchase it officially under their central bank. It would be their government. But Chase and Boney do not report that back to the federal government. So when you hear about this notion of, all this debt's being held by foreign governments, that's probably not true. But it is a large number, and where it's obviously, right, and where it starts to get scary is as it becomes a larger and larger piece of the gross domestic product. Relative to other countries, the United States is still at a fairly low ratio, and I haven't looked at that lately, but so although it's a problem, it's not nearly as ominous, in my opinion, as the notion of the debt ceiling. Because what happens with the debt ceiling is that they pass a budget, they have spending of entitlements and whatnot that they know is going to take them over the debt ceiling. And then when the debt ceiling comes, they play political chicken to say, well, we're not going to raise the debt ceiling. Well, what happens when the federal government raises the debt ceiling, it's not like, they're allowing themselves to go ahead and have the current debt continue to be paid and then issue some more. Instead, they need to raise that debt ceiling so that they can, about 2/3 of this is in short-term financing. It's 30 days, 60 day, 90 day, 1 year, because many investors look to put their short-term cash here. And so as that 2/3 rolls over at least every year, they need to sit there and basically issue new debt to pay off the maturing debt, and then they issue a little more to cover the deficit for the current period. And so if the federal government were to ever default on the debt by not raising the debt ceiling, that would have, cataclysmic impact to the economy. So they play this little chicken game with it. Hopefully, they would never be, reckless enough to actually not, let the federal government ever default on its debt. That would be a financial crisis that would make some of the previous financial crises look like a picnic. So anyway, so that's how that interperiod equity idea works. State and local governments tend to have balanced budget requirements. The federal government does not. Any question on that? Okay, good. When we talk about not-for-profit, we're really going to be asking the question, you have donors make contributions to not-for-profit entities, and we're talking about private sector not-for-profits, and we'll talk about the FASB requirements there. And we'll see that the financial statements for not-for-profit entities really are trying to help donors assess Are the not-for-profit spending the money for the intended purpose? How are they going to spend, or how are they spending a donation I've made? And that we'll take some look at some of that a little bit later in the class. Okay, so the minimum reporting model for state and local government, and I'm sure you're somewhat familiar with some of this, and this comes from the GASB, okay, the state and local governments, is that we will have basically two large tranches of information. Required supplemental information, which I have abbreviated RSI here, okay, required means what? It has to be provided. Supplemental means that it adds to something else, and the something else that it adds to is the only other thing that we see, which is the basic financial statements. So we're going to take a look at a slide here in a minute that is going to give some details to what these statements are, but you have the government-wide statements, you have the fund financial statements, and then the notes to any set of financial statements are seen as an integral part of those statements. So GASB refers to that entire thing as the basic financial statements. Now, we supplement that with required information. State and local governments have to provide this in order to be in compliance with generally accepted accounting standards issued by the generally accepted accounting procedures promulgated by the GASB. And we have the management discussion and analysis, which is the first thing you should see when you pick up the financial reporting model required by the GASB, and that is supplementing the financial statements. So I think we'll have time to look at the annual comprehensive financial report, of which this is a part of for San Francisco, and we'll see that the MD&A is in there, and really the MD&A almost reproduces the financial statements in there again as a visual to help explain different things that are going on with a government. So you have that. Then you have what? The basic financial statements, both government-wide and fund statements, and the notes there too. And then you have additional required supplemental information other than the MD&A. In other words, it's required. It also supplements the financial statements, but the structure is such that that information comes after you have looked at the financial statements, including the notes there too. So that's the basic model that you want to keep as a visual in your mind's eye. Now, we do have this little arrow here that goes back and forth. And what that's telling us is that the government is required to show the relationship between the government-wide approach of looking at the financial reports of a government versus the fund level approach of looking at the government's financial statements. Now, we'll talk about modified accrual versus full accrual in more detail as we go through the different requirements when we talk about revenue recognition, for example, et cetera. But I'm just going to do a quick example of what the differences are, okay? And then show you how that would be reconciled. So let's say a government buys a piece of equipment. I don't know, maybe a garbage truck, just to use a, something. Let's not use a garbage truck. How about a steamroller? Something to, flatten the road bed or something, right? For road maintenance, okay? Now, what happens? In the government-wide financial statements, that would use full accrual accounting, and under full accrual accounting, as you probably have known for a long time, there would be a debit to equipment. I don't know how much something like that costs. Let's say $50,000. I don't know, maybe more than that. Okay, and let's just say they paid cash for it, and so there'd be a credit to cash for $50,000. No shock, no surprise. Okay, and that you bought equipment and you have to report that equipment as an asset, and that's something you learned about in your first accounting class, right? Okay, for the fund financial statements, we would still credit cash, same transaction now, but we have to record it for the fund level, and under something called modified accrual, we would credit cash still, okay? But instead of crediting cash, we would simply debit an account called expenditure. We would debit an account, okay, that is going to show up on the operating statement. And for our governmental funds, we call that the for our governmental fund financial statements, we call that the statement of revenues, expenditures, and change in fund balance. Same transaction recorded differently, and it would show up on the operating statement for our fund statements, our governmental funds anyway. Government-wide, same transaction would be reported using full accrual accounting. So now with this example out there, I guess my question is, when we record the transaction for San Francisco, would we record it like this and the system would simultaneously, for government-wide purposes, have something like this being entered at the same time? Or would there be a process that would convert the fund statements to the government-wide by making a series of entries? I almost picture it on a worksheet where there would be a credit to expenditure and a debit to an account called equipment to turn the fund financial statements into government-wide statements. That's a question.
Yes, that is, it's not an automated process. It has to be done through journal entries. That's what I was mentioning, the full accrual view of the world. So those would be.
So is it two sets of entries, or is it one set of entries to initiate and then another set of entries to convert?
The expenditure piece and the cash piece actually just, they happen through the system. So like when we, have POs, we order products, then they become the expenditures. We have a voucher process. So the voucher goes out and then that records the expenditure and the cash once it's paid, right? So once the actual money goes out the door, it'll decrease cash. That's happening automated through the system. But when we go to convert it to government-wide, that's where the journal entry would come.
I see. So you'd enter a voucher number that would cause this journal entry here to happen. And
Yeah,
then,
like a AP processing, it starts from the PO process. We have a series of steps, but that all happens we use PeopleSoft. It happens in our PeopleSoft system.
right. And then later on, when we go to pull together the government-wide, that's when we would make journal entries and the journal entry, kind of scribbling all over this slide, but on a worksheet, what we would have to do is credit the expenditure, right, for 50 and debit that's 50,000 and
Yeah.
debit equipment, right? And then that would convert it to the government-wide.
Yeah.
I see. Okay. Okay, good. And that's how I figured most governments will do it, because in the federal government, okay, the consolidated statements, and the government-wide is a consolidation. I'll show you a little bit how to visualize that here in a minute. The government-wide statements are a consolidation of the fund financial statements to a large extent. In the federal government, there are 32 agencies: IRS, public debt, different agencies, Department of Defense, that get consolidated into the federal government's government-wide statements. Now, the first time the government did that was in 1997. Okay, I was involved in that audit. It's my little, award for having done that. And I've been involved in that audit. And the problem is that the systems there's two different sets there's 32 systems versus one big system. And they don't, instead of trying to consolidate everything from the bottom up, they have two separate systems, and then they can't get the two systems to reconcile. And that's the mess that you would have if you had two different systems. So now what happens is, because that process doesn't work in 1997 and to the current date, so that's almost now 40 years, guys, that they've been trying to get this right. Is that right? Is it really almost 40 years? God help me. That they've been trying to get that right and they can't figure it out. And so they can't get the balance sheet at the government-wide level to balance, because all the transactions that they need to get bubbled up from the individual level to be reflected appropriately at the government-wide level versus the fund level, they can't seem to figure out why they lose certain transactions, and that bubbles up into a disclaimer of opinion. Disclaimer of opinion is where the GAO comes in and says, we cannot give an opinion on the financial statements because they can't even make the balance sheet balance properly because of the problem with these systems. Now, in spite of that disclaimer of opinion on the federal government's financial statements, people line up every Tuesday to buy Treasury securities. That would not work for a state and local government. There would not be people willing to just step up and buy debt of state and local governments if they couldn't even get their balance sheet to balance, if they couldn't get an opinion on their financial statements. So state and local governments have to be much more responsible for this process that we're talking about here to convert fund statements to the government-wide statements and make sure that there's a clear connection, and that's what Gatsby was doing there with that little arrow, that there's a clear connection there, that little back and forth arrow between the fund level and the government-wide level. Question? Okay, good. So again, we'll talk about net position, and we'll talk about the change in net position at the government-wide level. And we're really looking at the government as a whole, and we're trying to accomplish something called operational accountability, and we use the economic resources accrual accounting approach. So obviously with that entry that I made there, that's full accrual accounting, and that's what we use for the government-wide statements. For the fund statements, okay, it varies by fund type. Now, there are three different fund types: governmental funds, proprietary funds, and fiduciary funds. And you can see the different names of the funds there. We'll get more into some of that later. I think for City and County San Francisco, if you look at the fund financial statements, only the general fund is called out as a major fund. They do have these other, and there's usually only one general fund for a state and local government. And so you see that information listed. For these other fund types, there are four other fund types, and those others are apparently, from what I can glean, and maybe Karma can help me with this, the other funds are not considered major funds, and so they're not reported on the face. They are combined and reported as one column on the face of the fund financial statement, and then you have to dig into some of the combining statements to get to the details, which how much is special revenue versus capital. Did I read that correctly?
Yes, that is correct.
I was looking, yeah. And then you have the proprietary funds, you have the internal service fund and the enterprise fund. And then for our fiduciary funds, you have custodial, investment trust fund, private purpose trust fund, pension. And not every government has every single one of these. I think the city has all of these, right?
Yes, we have all of them.
Yeah. Okay, good. And you see, we'll get into more of those in some of the other chapters. Okay, so I thought this slide that I lifted from some of my CPA review material was useful, and that it shows all the different names of the funds. It shows whether the fund uses modified accrual, which is what we use for our governmental funds. And we will talk more about what modified accrual means later. Current financial resources focus means later, but that notion of buying a long-term capital asset and debit and expenditure is a classic example of modified accrual approach. And notice, guys, for our government-wide statements, okay, then we have what? The full accrual, and thus why we have to talk about that process of converting from the government fund level to the full accrual level. For our proprietary funds and our fiduciary funds, okay, a couple of important things. Notice they use full accrual, okay? So when we take our proprietary information, we will go ahead and take our enterprise funds and consolidate that into business type activity at the government-wide level. Now, that doesn't require all of that conversion because they're both using, as you can see, full accrual accounting, right? Okay. When we deal with the governmental funds, what we do is we take all of these governmental funds and general fund, special revenue fund, debt service fund, capital project fund, permanent fund, plus something called the internal service fund, and we roll those into governmental activities. So there's some conversion for the governmental funds for the internal service fund, which is a proprietary fund. We don't have to go through that conversion because they both use full accrual accounting at the government-wide level and the fund level. Carmen, I'm leaning on you kind of heavy here. I appreciate your help with this. My understanding is that there are some governments that will take internal service fund activity and include it as an enterprise fund. Does San Francisco do anything of that nature?
We use enterprise accounting, but we call it out in its own section of enterprise. So we don't call it an enterprise, but it definitely is using the full accrual method. You'll see the uh, internal service funds in a separate section in the ACCT. Um,
Okay.
and it will be included in, I think it is, it might be included in our summary column. Um, but
Okay.
yeah, we don't treat it as as an enterprise statement per se. We have it, it's
Okay.
done, but it is on full accrual.
Okay. You know what we can do is again kind of our little mental notepad here, and I'll show you because I'm going to open up the annual comprehensive financial report here later, and we'll kind of see how it looks.
Yeah, it's rolled up in, I think, the separate column within enterprise as a business type, but I'll double check that while we're talking.
Yeah, I mean, what happens is when you dealing with the fund level, you know, here, which is what this is meant to represent. Generally, you'll see enterprise funds listed, and when I looked, there were several of them, and then there's a column there for the internal service fund. But I'm talking about the government-wide level, where you just see governmental activity and business type activity listed. Most governments will include internal service fund in with the governmental fund column, governmental activities column.
No activities column, that's correct. It's so in our proprietary fund statement, which does contain our actual business type enterprise funds, the last column after that column totals up is the governmental activities dash internal service funds, where we roll all the balances of all the internal service funds just together in one column and then present it here. And then they're presented separately in the labor sections of the aquifer.
Okay. Okay. So in this example financial statement that I'm looking at here, the way this particular example one works, okay, is if you were to look at the governmental activities, okay, the way this example works is this would be the general fund, special revenue fund, the debt service fund, the capital project fund, the permanent fund, plus the internal service fund. And then when we get to, and we'll talk about how we define primary government a little bit later. And then when you get to the business type activities, that is simply the enterprise funds.
Yes, at the government-wide presentation level.
Right,
So
right.
statement of net position and statement of activities, yes, that would be the same.
Same thing. Well, this is a statement net position, statement of activities. Would you do a similar approach, right?
Yes,
But this is like the balance sheet. But what I was saying is there are some governments that the nature of what goes on with the internal service fund, for some reason, and I guess there's some allowance for that, they include the internal service fund in with the business type activities. And it's not even consistent for each internal service fund. Some end up over there. And I don't know exactly, you know, I've just have read that before and I don't know exactly allows them to do that. But anyway, if San Francisco doesn't do it, let's just put that on the Who Cares channel
Yeah,
for a
no,
while.
we definitely keep it in the governmental activities on
Okay,
the government wide for this purpose. We're very similar to this governmental activities,
right.
not any
Um,
businesses. Right.
right. So just to kind of take a look, we can see the total and net position is like retained earnings. And there are various categories of net position. There's net invested in capital assets. There's restricted, there's unrestricted. Okay, I use the mnemonic run for that. And in the MD&A for San Francisco, I thought they did a pretty nice job describing, I think they're required to under the um, requirements for the MD&A. But they did a nice job of describing what was the source of restricted net investing capital assets and unrestricted. But notice for our, and again, this column that I'm in right now is the business type activities as I come over to the next slide. And notice the total net position, which is like the retained earnings, is 1,835,000 in this little example. Okay, now when you got down to that fund level, because remember, right, we have the what going back to that model, we have both the government wide, which is what we were just looking at, versus the fund level. When you come down to the fund level, what you would be able to see is we would then report, and I'm just showing you now for the fund level, the statement of net position for the proprietary funds. And as Carmen was saying, here's the total. And there could be several internal service funds all rolled up into one column. But for the enterprise funds, right? Two different types of proprietary funds, enterprise and internal service. For those, they're under this column of business type activity. Now, this particular, and by the way, the red doesn't mean anything. It's just where I borrowed this from for whatever reason they made this red. But the water and sewer plus the parking facility totals up. And if we come down to the net position, we can see that same number, that 1,835,000. Thus, they take however many enterprise funds there are and roll them up into the business type activity. Meanwhile, under governmental activities, it's all of the individual fund statements plus the internal service fund. Now, I can't do the same exercise where I'm pointing to net position at the government wide level versus a total of net position for all the governmental funds plus the internal service fund, because the statement of net position at the government wide level is using full accrual. The governmental funds, anyway, for the um, government for the fund level is using modified accrual, while the government wide level is using full accrual. And so what governments are required to do is literally provide a reconciliation of the net position that we're looking to here and how that reconciles down from fund balance totals that we see at the government wide level. But I don't think we're quite there yet, so I'm not going to show you that right at this time, but that is how that would work. Question. Okay, good. Now, again, and we've sort of already stated this, and we'll get more into this starting next time in chapter 2. At the governmental fund level, the 5 governmental funds, we use what? We use current financial resources measurement focus and modified accrual accounting. Okay. And so we mentioned that, expenditures, et cetera. And we're going to see that there's some very specific rules as to how you count for revenue in the government, both for full accrual and modified accrual. And we'll really spend quite a bit of time with that in chapter 4. Okay. For our proprietary funds, as we've mentioned, those are considered business type activities. And we will use full accrual accounting for both of those. Fiduciary funds, and something very important that I meant to say that I left out, they also use full accrual, but for the fiduciary funds are not consolidated at the government level. Okay, they are not part of the government-wide financial statements. The reason being that under operational accountability, looking at how efficient this government is really doesn't have um, a, a clear-cut purpose at the government for the fund level, in which our purpose is more of a fiduciary capacity. So we will look at these statements and understand those, but the important thing to know right now, when you're looking at the government-wide level, those funds are not included. Is that sort of your understanding, Carmen, for the rationale?
Yeah.
Yeah. Okay, thank you. Okay, good. So again, you can see the funds listed there. I have a bad habit of, kind of repeating myself with teaching occupational hazards. So if you see some slides repeat themselves, that's just to make sure that I'm covering things and that we're all sort of on the same page of understanding. Any question on any of that? Okay, good. And again, you can see that slide that we had earlier. Okay, and how that reconciles up. Okay, good. Let's talk about the financial reporting entity. Okay, and this information that we're talking about that has to be provided, the MD&A, the basic financial statements, some of what we've looked at both at the government-wide fund level, the notes there too. The required supplemental information other than MD&A. If you are a primary government, you are to provide that information. That's GASB says that, and the state and local statutes say, hey, you got to follow the GASB standards. So governments are going to provide that. Okay. Now, generally, the financial reporting entity consists of the primary government. Remember, we saw that primary government moniker there that I pointed out to you, and organizations to which the primary government is financially accountable. We call those component units. Now, you're wondering, what's this silly drawing here, John? In other words, the primary government would be like the parent, and the component unit would be like the child. Okay. And I always would tell my students, our parents financially are, responsible for their children. And the answer is, yeah. You say, go ahead and try and have a child and then tell somebody you're not financially liable for them, and they'll tell you different. Okay. So it's important for an entity to know, well, am I a primary government? And because if I am, I have to report all of that information. If I'm simply a component unit, then all I'm going to have to do is hop on the financial statements of a primary government. Okay, so what happens? State governments automatically primary government. State of California, state of Rhode Island, I don't care the side of the state, you are a primary government. You'd have to provide all that information, the MD&A, et cetera, the basic financial statements. General purpose government, city, county. So San Francisco, yes, that's why we're going to be able to look and see that they have followed that reporting model that we mentioned, that we've been talking about. If you're a special purpose government, school district, et cetera, then you have to go through a set of criteria to see if you are a primary government. If you are not a primary government, you're the one or the other. You're either a primary government or a component unit. If you're not, you're a component unit, you're financially dependent on a primary government, and you will appear as a component unit on the financial reports of the primary government. So in order to be a primary government, an entity has to have a separate elected governing board, has to be legally separate and fiscally independent. If you meet those three criteria, then you would have to prepare the MD&A, et cetera. If you don't meet all of those criteria, then you're a component unit, and you would report as a component unit on the financial statements of your primary government. Okay. Now, when we look at how component units would be displayed on the financial statements of a primary government. Again, I went back to that same example we were looking at earlier, but under when we'd have our GRAS plus our internal service funds under governmental activities, business type activities would be enterprise funds. But then there's a separate column for component units. Those are what? Those are entities that were not primary governments to which this primary government was financially responsible. And there's two ways of presenting. You could use blended, you could use discrete. This column or format like this is an example of discrete presentation. Okay, so again, which is basically what you're seeing here, discrete, where you have the column versus blended. And I'm going to ask Carmen, do you guys, I saw discrete. Are there any component units that would be using blended?
Yes, we've got a couple different ones, but the most easily recognizable one is our San Francisco County Transportation Authority, or our SFCTA. And you'll see that as it sits within the special revenue fund.
I see. Okay, and so it would be a blended, and fits in
It's in
special
blended, yeah.
revenue fund. Okay, okay,
Well,
great.
it's blended within the special revenue funds, but yes, it's it sticks out by, I mean, it has its own column.
Okay, okay, great. Okay, and we're going to take a look at some of this here for a little bit later. Okay, good. So the annual comprehensive financial report, ACFR, you'll see that abbreviated a lot. Okay, now when you start getting into the requirements of the comprehensive annual financial report, that a lot of that comes from here. It comes from the GFOA. Okay, and again, the question would be, well, why follow this if it's just this association? In order to get the excellence in financial reporting, entities will go ahead and follow this. And I'm sure maybe sometimes it's written into statute. It could be written into the contract of, say, the controller themselves, that that they'll make sure that the entity gets this award. Okay, so introductory section. Okay, I have a title page, contents, letter of transmittal, and then other information as desired by management, organization charts, those sort of things. And we'll take a look at some of that. I was surprised the letter of transmittal was fairly lengthy. I always thought a letter of transmittal was just sort of one page thing, but there's quite a bit that's talked about. And that's basically, Carmen, again, is that the mayor transmitting that to the city council? City and
No,
county?
that's actually the controller um, transmitting to the mayor and the board.
I
In our,
see.
I'm not sure other places, but in San Francisco.
Okay. Okay, good. Okay, so well, let's look at that financial statement. I mean, that financial section, excuse me, of the annual comprehensive financial report. By the way, guys, it used to be called CAFR, and if I haven't updated a slide for that, you can imagine that that might be something that's easy to miss. So forgive me if I forgot to fix a slide that had the old terminology. But the first thing you see is the auditor's report, okay, in the financial section. And in San Francisco, that's the MGO report. We'll take a little look at that here when we start to go into the San Francisco statements. Uh, MD&A, management discussion analysis, that's that required supplemental information. The basic financial statements and the notes there too, and the required supplemental information other than the MD&A. In other words, what happens? We pick up what GASB has said all state and local governments have to prepare, and we lift it up and we put it into the comprehensive annual financial report. Annual comprehensive financial report, and we stick it into the financial section. So we take something that's required by GASB, and GFOA has told us, well, when you prepare your annual report, you need to pick up that GASB information and stick it into this financial section next to the audit report. And then there are additional statements that are not required by GASB, but the GFOA is suggesting that if you provide that information, you will provide it in the financial section. Now, confession time here. I didn't get a chance to look at this because I looked at the GFOA checklist that Carmen provided us, which is, by the way, now posted on e-learning and under chapter one. And I looked in the wrong place. Okay, that's my confession for the night. I didn't look under the financial section. I went all the way down after the statistical section of the annual comprehensive financial report checklist and said, oh, okay, GFOA doesn't include this as a checklist item when I should have been looking in the financial section. So I'm going to ask, does GFOA have this as part of their checklist? Some of this information that's outside of GASB's requirements, the combining schedules and whatnot? Question mark.
Yeah, I think it does.
Okay,
I
we'll
double
check it.
check on the statement, but I think, yeah, to look at you, as you saw, it was quite lengthy.
Yeah,
Um,
yeah, it is. I was going to print
yeah,
it and I got,
and some of it's kind of rote for us, so honestly, I don't necessarily look at it every single time. We kind of use it. We have a staff person who's going through and checking to it, but
right.
we're,
You
and
know
the
what?
auditors,
Let's
they
go.
know our statements, so they're not always looking every single time.
Let's
But
go
yeah,
ahead
hopefully
and
it's there.
let's do it now while it's on our
Yeah,
minds. I think it'll be kind of a fun exercise.
okay,
So, let's go ahead and see if I can find it first thing. Um, I have a bad habit, guys. My computer is probably slow because I download things over and over and over again. So it's probably sitting right there in my downloads. There it is. And like Carmen said, I started to print it because I'm like, oh, well, it's only 80 pages because I'm old and I like to print things. But then another thought stayed in my mind that let's not do that. So let me make this a little bigger if I can without destroying the thing. Okay, so you can kind of see that, and this is what Carmen gave us. And I'm just going to go to view full full screen. Nice. Okay, and then I'm going to do this because I think it'll be a little easier to navigate. Okay, so here it's talking about the MD&A and is the MD&A meeting certain requirements? So we're in the ballpark. I know it's kind of hard to see, guys, but this is on e-learning if you want to download it. See financial section, government wide, and the fund financial statements right in here. Okay. And so now we're in the financial section. So let's see if I keep going. And like Carmen was warning us, it is a bit wide. So that's for the statement of activities. And we're going to see all those statements listed here in a couple seconds. Now, notice, guys, in the financial section, I want to make clear they're having you go through checklists, not, do you have these statements to meet GASB requirements? I mean, to meet GFOA requirements, that's GASB. And then the GFOA is going through and even more clearly refining what it is you should be providing, So they're giving guidance that goes really beyond GASB. Okay, budget and actual. Now I'm starting to think maybe I got myself in over my head here. Cash flows for proprietary funds, yeah. Note disclosure. Okay, and this note disclosure thing I'm sure goes on forever. Not sure why that's highlighted, but okay. And now I think you're seeing why I looked at for it in the wrong section because I probably got lazy and was looking for a quick answer to the question that I'm looking for. I got a better idea. hello, John, why don't you do this? Get out of full screen and use something called a searching tool. And let's see if it has in there combining statements. I don't know why it's doing that. Okay, here we go, combining statements. I want to see what it tells us about them. I don't know why it won't let me finish that word. Why is it not letting me do that? Okay, so let's go down. Okay, so yeah. So combining statements included within the basic financial statements, condensed financial information within the notes. So it is asking as a question, are these combining statements presented? I'm sure there's other places, but I think we've had enough of this. So again, these combining statements are not a requirement of GASB, but the GFOA is saying for excellence in financial reporting, you should be providing something like that. Okay, so it's kind of a difficult way to get to that answer, but it's also showing us the usefulness of that GFOA checklist that we got to kind of see, okay, what are some of the requirements? So we have, again, the minimum reporting requirements, GASB, the MD&A, which is RSI, the basic financial statements, the notes there too, and then the required supplemental information other than the MD&A. And then there's other stuff that goes beyond that, for example, the combining statements. So when you take a look now, and I just sort of gave more detail here than just that picture. We have the what? We have the MD&A, which is required supplemental information. We have the government-wide statements. There are two of them, a statement of net position, which is sort of that one we were playing around with where I circled governmental activities and business type activities. And we also have the statement of activities, which is like the income statement. We have our fund financial statements. So we would have the governmental fund, that's the general fund, special revenue fund, debt service fund, capital project fund, permanent fund. We would have their balance sheet and their statement of revenues, expenditures, and changes in fund balance. Those are modified accrual statements. The government-wide is full accrual. Then we would have the proprietary statements. They prepare a balance sheet and an income statement, statement of net position, and something called the statement of revenues, expenses, and changes in a fund net position, and then statement of cash flows. Statement of cash flows is only prepared for the proprietary funds. It's only prepared for the internal service fund and the enterprise funds. And then fiduciary funds have a balance sheet and an income statement, which is called a statement of net fiduciary net position and statement of changes in fiduciary net position, the notes, and then the required supplemental information other than the MD&A. And you saw in that checklist where we started sort of seeing some of the discussion, some of the pension stuff, and some of the additional information about budget, infrastructure approach. I think, Carmen, you told me that that San Francisco does not use the modified approach, right? They use the required approach.
For fixed asset. Oh,
Which is using showing depreciation and all that under the required approach. Okay, we might have lost Carmen for a second. You still there?
oh, sorry, I must have muted and unmuted. Yeah. So yes, we do. We show the accumulated depreciation and depreciation expense at the government wide and
Right, which is
enterprise level.
they refer to that as the required approach, but when they came up with this, some governments kind of balked at that, said, "Are you crazy? How am I going to figure out?" And I'm going to use, you know, New York as an example. I don't know if they use the modified approach or not, but it's kind of a colorful example to say, how do I know the accumulated depreciation of the Brooklyn Bridge? Come on, it's been there since 18 something, however long it's been there. So, they offered this modified approach, and we'll talk more about that in chapter 5. And then other supplementary information, which is optional, there's our combining statements. We saw that even though GFOA says, hey, you want to provide that to get the Excellence in Financial Reporting Award, um, you know, um, um, the the GFOA says it, but the GASB does not require it. Variances, you do have to show budgetary comparison schedules, but literally the column that shows the difference between the budget and the actual, that's an optional presentation. You don't necessarily have to provide that column. Okay, so we're going to take a quick look at the MD&A. It's a narrative. Okay, it's written words. Okay, statistical section. This has everything you want to know about a government, but we're afraid to ask. It literally will talk about per capita data, et cetera. And it's sometimes for a guy like me that likes demographics and whatnot, it's kind of interesting to go ahead and read through some of that. And I think it's useful. My feeling is that it's useful for business purposes if you wanted to understand the nature of different aspects of the government. I thought it was useful information. That's probably the reason the GFOA decided that this would be something that should be provided to get excellence in financial reporting. Okay, those are our slides for chapter 1. I would like to make sure that we are not just talking theory here. So, and you get the entertainment of getting to see my entire desktop here. But I want to go into this. And guys, feel free to jump in. You're the experts here. Okay. But let's just take a look. And this was the most recently available, I believe, that I saw. And I'm going to go to full screen. Okay. And I'm not sure who these guys are, but this is the seal of the city and county of San Francisco. Maybe some of you know Mr. Wagner personally. Okay. And then you can see per the GFOA requirements, right? The introductory section with the transmittal letter, we're going to see that indeed San Francisco does get the GFOA award, Certificate of Achievement. The org chart, list of principal officers, the audit report, MD&A, basic financial statements, fund financial statements. Okay. And then the notes there too. Okay. And then required supplemental information other than the MD&A. And then we start getting into things that are not necessarily required by GASB, but the GFOA suggested it would be a good thing, as we saw per their checklist. And so governments will provide that. Okay. So let me see if I can make this a little less cumbersome by using the little page finder, introductory section. Okay. And that letter of transmittal from the mayor, London Bree, former mayor, the honorable member of the board of directors, residents.
Oh yeah, that's who we send it to.
That's who it's sent to. I see.
Sent to, yeah, and then at the bottom, it's signed off on by Greg Wagner, the controller.
I see. And it's from the controller. Okay,
It's from the
great.
controller, yes, to the
Right.
mayor and the board.
Okay.
for us. I don't know if it's always that way.
You know, I'm an auditor, so I have to look, right? Okay.
Yep. Trust
I
but
wouldn't be able to
verify.
sleep tonight if I didn't look.
That's right.
So don't take it personally. I
Not
was
at all.
I always tell folks that I'll be my friends I'll be with, and they'll say something, and I'll be like, "Well, wait a minute, didn't you say?" And they're like, "What are you doing to me, man?" I'm like, "Don't take it personally. I gotta get it all straight in my head." And then there's that award. Congratulations. You all take your own. Do you guys get a party after this is awarded?
Um,
No. Then you
well,
get the org chart. Okay. And some of this stuff starts to become voluntary, I think, as to what exactly a government chooses to include. Financial section, right? There's the audit report. What I found interesting about this, Carmen, is that this is only the report for the financial statements. So I guess what happens is in the when the single audit work is done, as part of the information that goes to the and we'll get more into this, but after the single audit is done, which is a federal government act, when you expend 750,000 more federal financial assistance, you have to fall under the Single Audit Act. And when the Single Audit Act report includes the auditor's opinion on the financial statements, and there it would say that we followed generally accepted government auditing standards when we did this. So I guess this is just the gas report, and it talks about that they follow gas principles generally accepted in the United States. That's really by the way they're saying that. That means that they only follow the AICPA standards, but really, when they audit the financial statements, I'm sure they audited by this. But what, because they ultimately have to do that for the single audit report that says you will follow these standards when you do the audit. But to avoid confusion, I think what MGO did is they just used this phraseology. But if you pick up the single audit report off of the Commerce Clearinghouse where all the single audit reports are listed, then it would say it followed generally accepted government auditing standards, and it would include additional requirements such as a reporting of the scope and nature of the work that the auditors did with the internal control, work that they did in compliance, and then specific to the single audit, an opinion on compliance, a report on internal control, all kinds of, there's 7 total reports, and I'm kind of getting into another lecture now. But is that your understanding as to why they're not calling out the GAO
uh,
standard?
they do mention the the gas, so the GAAS on
Right.
page 2 and 3. But yes, if you're looking for the compliance reports, those are with our single audit.
Yeah. And in the compliance reports, so they still have to audit the financial statements, and they have to audit them according to this, and then they would, to follow the reporting standards contained here, they would have to mention GAGAS, generally
Yes,
accepted
Vegas,
government auditing
exactly.
standards. But I
Yeah,
think
but not here. Yeah.
I think MGO, because I taught a class there, and my recollection, and I don't think I was using San Francisco for that. I asked the question for Los Angeles, and the answer of the it wasn't Annie, it was the manager for the audit, because I think they do that, or maybe it was Sacramento, I forget where I was. But she said the partner for that said, yeah, we want to avoid confusion. So we
Yeah,
just do it for gas as part of the comprehensive report.
great.
And then for the other one, we do some of the other things. Notice, guys, that the opinion only covers the financial statements. They are to read the other information for material inconsistencies, but they don't audit that information. Okay, good.
Yep.
Let's get signed there. Any comment there, Carmen?
And then just as you said, they have the separate reporting for the single audit for the federal.
Right.
Yep.
The MD&A. again, it's read for consistency, but it's not audited. And this is what I was talking about, the different categories of net position up here. Okay, so a lot of really useful information in here. And then including, remember, it said the MD&A should discuss the structure of the financial statements and whatnot. So there's a nice little chart. I probably could have used this in my slide instead of the other one. And some detail. Okay. And then this is condensed financial information. Okay, but government wide. I notice governmental activities, business type activities. Okay. Um, what I want to do though, because that's in the MD&A, I want to jump to the basic financial statements, but a lot of good information there that I'm going past. Do any of you work on this, by the way? This MD&A stuff? No? Yes? Okay, but you can see the primary government, okay, governmental activities, business type activities, component units. I mean, pretty much with that little example we're showing you, right? And then this, I didn't show it, is the statement of activities. This is like the income statement. What I like about this presentation that GASB required, it's sort of, to me, is like an upside down income statement so that you have all the expenses by function, okay, et cetera. And then the different revenue types by the bottom. And change in net position is a positive number. And thus, my big question, you can pass a balanced budget act or requirement, and then there's the actual performance. There's, man plans and God laughs kind of thing. And so I guess my question was, although we had a positive change in that position, which is like the net income number for a government, what would happen if this was a negative number? What would happen if this was a loss? Would somebody be in trouble or something?
No,
Nobody
are you,
knows.
you're asking me? No, that can happen. And it's because also when you're at the full accrual level, right, you have all kinds of other stuff piled in there. So the pension, the OPEB. So yes, I'm sure there are places that have negatives because they at full accrual
Yeah,
are going
I-
to spend at some point more than they're bringing in. But yeah, I don't know if I don't think anyone gets in trouble. So that's the problem though, right? We budget at the actual basis. We don't budget the long-term OPEB payments. It's more of a pay-as-you-go view of the world for our budget,
right.
and most people's budgets.
I think when you do get down, because this is not including the fiduciary funds, remember? Because
Mhm.
we're at the government-wide level. So it's
Correct.
just governmental activities, business type activities, and the fiduciary funds aren't included. But I think as I was browsing through this today, I looked through and I saw some negative numbers for the fiduciary funds, right? Which would be the pension and that kind of stuff. So,
Yeah, we do have some negative numbers in a couple of the special revenue funds as well.
mm, okay. And then we get to the fun level. Okay. And I want to make this, I don't know why I'm stuck with this zoom on. Maybe I guess if I hit this, it'll turn off. How do I turn that off? I'm always afraid to hit to size. Of course, I'm still stuck with that plus. Anyway, um, when you look here at the fund level, you have the general fund. This general fund is being seen as the only major fund. Other governmental funds is including the internal service funds, the debt service fund, the capital project funds, permanent funds. right, are all going to be rolled in here because they're, and we'll talk about the definition of major funds next time, but they must not be meeting the definition of major funds, so they're not listed here. But we do see them in some of the combining statements and whatnot. You can see the categories that that we'll be talking about more. So even though for the government wide, we only have three categories: restricted, unrestricted, and net invested in capital assets, net of related debt. When we get to the fund statements later, we'll talk about five categories of fund balance. And then because we have differences between modified accrual, which is used for the governmental funds, and net position, which is shown at the government-wide level. That little arrow that pointed back and forth, this is the reconciliation. And notice, guys, there's an add for what? Capital assets used in governmental activities that are not financial resources and not reported in the funds. You add that back. Okay, so where we would be making a journal entry debiting and crediting to generate the government-wide statements for the fund statements. This is a required disclosure per GASB, is what that little arrow was about, showing how we get from a fund balance total to a government-wide total for the equivalent of what is the essentially the retained earnings. We reconcile the retained earnings, or the equity, if you will, of the government here. Okay, and so forth. You can see all these different things. Now, what I would like to do at this point, because what do we got, about 4 or 5 minutes left? Because we've agreed to get out a little early. Oh, we were supposed to go to 7:15, right? So I've got a little bit more time than that, but I won't hold us to 7:15. What I want to do is sort of show you how you might be tested on this material. Remember, I said I was going to do that. Okay. So, and again, what we'll do when we actually take the exams, we'll basically, and I'm thinking, and I'm kind of kicking this around, maybe I'll let you turn you loose on the exam for maybe about an hour or so, and then we'll go through it together. And that will be how you'll earn your grade in it. Again, let's say you worked it on your own and you got 70%. You'll still get 100% by the fact that you were there that day when we went over it. Does that make sense? And does that sound like an approach that might be interesting for you to see how I would test you, but we'll go through it together. And as long as you're here that day, you get credit for 100% of the exam.
Yeah.
Sounds fun. Okay. But this is sort of what your exam would look like. Okay. So take a look. Governmental Accounting Standards Board is the primary standard setter for state and local governments. Okay. Again, these are all chapter one questions on the actual midterm. For our first one, I think it'd be a mixture of questions from chapters 1 through 4, probably a little light on chapter 1 because this is pretty basic stuff. But which of the following is the most authoritative? The GASB. Which of the following has the highest level of authority? The GASB. Okay. If you're waiting for something exciting, stop. Okay. Which of the following has the highest level for a government in the governmental gap hierarchy? The GASB. Okay. Which of the following organization issues standards that are authoritative for state and local governments? The GASB. That's just kind of like, for state and local governments, who's your daddy? The GASB, right? Okay. Now, for this number 5, the body that has established to recommend accounting and financial reporting standards for the federal government, that's the FASAB. Again, recommend, and that the legal authority to set the accounting standards rests with the GAO. But the GAO accounting standards, did I say accounting standards for the federal government? They also issue the auditing standards for the federal government, but the financial reporting standards are also issued, which is not what I just held up, are also the legal authority of the GAO, but the GAO recognizes the FASAB. It's similar to the notion that the Security Exchange Commission under the 33-34 Securities Acts has the legal authority to set accounting standards for private sector public entities under the notion of interstate commerce, but the SEC recognizes the FASB as the standard setter, right? And that was reinforced again under the Sarbanes-Oxley Act, and that the SEC has under Sarbanes, the SEC has the authority to establish auditing standards for private sector public entities. But they have recognized the PCAOB as that standard setter. Um, the Financial Accounting Standards Board, when we get to non-governmental not-for-profits, that's the purview of the FASB. Okay. And you say, okay, well, what forces a not-for-profit to follow the FASB standards? Most state statutes will direct not-for-profits. If you want to be chartered in this state, you have to recognize the FASB standards. So even though, we talk about this and it starts sounding like this wishy-washy, kind of, they recognize it, the standard to recommend standards. It gets bound in statute, but by the fact that the entity that's recognized in statute is the one that rules, and then they can recognize other standard setting bodies as the one that has to be followed. Which of the following is not an objective of financial reporting? And I put this question in here. A is something that is not an objective financial reporting. Again, we talked about this a little bit last time. There is no requirement that federal, state, local governments have an opinion issued on their internal control, which is what would happen, which is assessing the adequacy of the system internal control would be offered through that opinion. But I don't know of any federal, state, local government that requires. I know the federal doesn't, and it's hard to speak for all state and local governments. There's a multitude of them, but I've never heard of any requiring there be an opinion on the internal control. There's the report on the scope and nature of the work that the auditor did on internal control. And if there are weaknesses, they need to be called out. But there is not an opinion as to the effectiveness of that internal control that's required under the Single Audit Act. See, I knew I was going to do this. The annual comprehensive, John. And I think I fixed this on the one that's on e-learning, but I opened it from my file on my desktop. The annual comprehensive financial report.
Oh, I have a question.
Mm-hmm.
So after this class, our assignment is to do the chapter 1 practice midterm, the one in e-learning on our own.
No,
And
we're doing it now.
now? Okay.
I guess your assignment would be to maybe start looking at some of that McGraw-Hill stuff. And yeah, maybe look at some of that McGraw-Hill stuff, and you can look at this again. But
The
I'm not looking at
McGraw-Hill, you mean the one for in Connect? Or just
Yeah, the McGraw-Hill, the one that I showed you the link to here.
okay.
Or was it in the syllabus earlier?
Yes.
Yeah.
The McGraw-Hill Connect questions.
Yeah, start to take a look at that. Don't give them any money. If you're not getting that through the controller's office, don't give them any money. See if you like it, and then if you like it, in a couple of weeks they'll hit you up for your credit card, and then you can pay for it. But I'm not requiring it.
Okay.
Okay.
Thank you.
But Mary, the benefit of maybe visiting this again, during the next week until we reconvene, is you're kind of building up the scar tissue, muscle tissue, whatever you want to call it, around what you will see is the exam, although we'll do the exam together, right? I mean, I'll let you guys play with it for a while, and then we'll, call an end to that time, and we'll go through it together. And so you'll learn by participation, and that's how you'll get your grade.
Okay, so for next week, we'll go over this chapter 1 midterm questions again as a class.
No, I'm doing it now.
Okay.
We'll do chapter 2 next week.
Oh, okay.
Something like this. We'll look at the slides, we'll look at the questions to see. So we're kind of taking this weightlifting approach, right? And that, okay, we looked at the slides. This is how you could be tested on this. Slides, practice midterm, slides, practice midterm. maybe a comprehensive practice midterm where instead of all the questions coming from one chapter, we'll have questions through 1 through 4. Then we'll convene on whatever date the midterm's supposed to be, maybe the first hour of class. You guys work with that independently, and then we'll stop that and I'll show you the solution, and that's how you'll earn the 100 points for the exam. Okay. So an annual comprehensive financial report prepared in conformity with GASB recommendations. Okay, you see, this question I took from the test bank. The annual comprehensive financial report, and I leave this wrong in here on purpose, because this is from the test bank, and I'm showing you that the people that write textbooks are not always correct. It's under whose requirements? GFAO. The annual comprehensive report comes from this thing, and we saw the checklist thanks to Carmen. So that's what has what? The introductory section, financial section, and the statistical section. So I know that was wrong, GASB, but I left it there because that's the way it was written by the textbook. And you may be beyond, having to have cautions about textbooks, but a lot of times what the textbooks do is they farm out the writing of questions to graduate students. And the graduate students sometimes wait, the night before they're due, and they have a hangover, and they sit there and they come up with these questions, whatever. It's the Government Finance Officers Association, John, GFOA, that recommends when you're preparing a annual comprehensive financial report to have these sections. Which of the sections, which is included in the financial section, and we saw that in the financial section, transmittal letter, no, that was introductory section. Tables and charts, that was what in the statistical section showing economic data. Description of the government, that really should be in the introductory section. Basic financial statements in the notes, yeah, that was that piece. Auditor's report, basic financial statements, government-wide, fund, notes there too. And then we had what requires supplemental information other than MD&A. That's why B was the correct answer here. What should the government-wide statements report? Net position and the results of operations. That's why we saw the statement of net position and that statement of activities, which is reporting on the results of financial operations. It's like the income statement. I remember I said it was like an upside down income statement. Okay, what should the government fund financial statements report on? Fiscal accountability. Fiscal accountability says, are you spending your money in compliance with legal restrictions, in compliance with budgetary constraints, right? And so that's why we'll see later budgetary comparison schedules and all that stuff down at the fund level. Okay, that's how we're going to do things, guys. We're going to go through the slides. We're going to try to bring in some flavor that is specific to the city and county. And then we're going to look at some questions to see how you might be tested on this material in a more generic sense, not specific to the city. And hopefully we'll learn here some interesting stuff together as we keep going. Question. Okay, guys, go ahead and start to acquire that textbook material, or at least sign up for the free trial period. If you have any questions, concerns on how that's working, feel free to reach out to me and I can do my best to help you through that. If not, McGraw-Hill is usually pretty good at figuring that stuff out for us. Okay, guys, thank you.
Thank you.
Have a good night.
Thank you.
Night.
Thank you.
Thank you.
Thank you.